IRR, or internal rate of return, is a metric that's often misunderstood and confused by real estate investors. In this video, I'm going to walk you through exactly what IRR means, what it does, and how it impacts your real estate investing. So let's break down what the IRR, or internal rate of return, actually does and what it's measuring. Because as opposed to the cash-on-cash return in the investment, which is really giving you a snapshot in time, the IRR is telling you the entire story of the investment over the lifespan. And it's really giving you the return, yes, but also the time value of money when money is being returned back into your pocket. Think of it this way. Let's say you invested in an opportunity and you got a huge chunk of money at the end of the investment. Now let's say you had option B, where you were able to receive 30% of the profits, not at the very end, but in year 2, and then you got the rest of the money at the end. Well, the dollars returned back to you in your pocket in year 2 are actually more valuable dollars than the dollars you get at the very end because of the time value of money. We have inflation eroding the buying power of the dollar. So you actually, as an investor, want to get as much money back to you as soon as possible. And then there's opportunity cost. If you get more money returned to you sooner, you can then reinvest that money in other opportunities and then start the cycle all over again. So this is a major strength of using the IRR, because it's really giving you, yes, the return, but also the time value of money and when more valuable dollars are being returned to you. And this is why, as a real estate investor, you want to look at IRR in addition to cash-on-cash return and equity multiples. So let's say you're investing $100,000 in an investment opportunity, and we have investment option A, which is where in year 1 to 4, you are getting $10,000 back in profits, and in year 5, you were getting $150,000. With investment option B, you're getting in year 1, $10,000, in year 2, $40,000, year 3 and 4, $10,000, then you get $120,000 at the end. Essentially, we're taking $30,000 from the end and moving it to year 2. But how does this impact the internal rate of return? How does this impact the time value of money and how valuable those dollars are in your pocket? Well, the IRR, the internal rate of return of investment option A, is 15.84%. And the IRR for investment option B is 18.3% because more valuable dollars are being returned to you sooner. And that's an increase, an improvement of 15.5%. So the obvious question is, does a larger or higher internal rate of return make for a better investment? And the answer is maybe. The reason for that is internal rate of return, just like all the other metrics out there, don't give us a complete picture. Yes, IRR tells us if money is being returned to us sooner and more valuable dollars, that's great. But what it doesn't do is tell us our cash on cash on an annual basis at certain points in time along the investment. So as an investor, you have to ask yourself, well, what's important to you? If you're investing for annual cash flow, yeah, you're going to want to take a look at the IRR, but cash on cash return is also going to be important for you. And if you're an investor who's strictly focused on capital appreciation, well, equity multiple will be something that you want to take a look at alongside IRR. And this is why, to get a complete picture of an investment, you have to use all the different metrics at your disposal. That's internal rate of return, IRR, that we just covered, cash on cash return, and equity multiples. A single metric won't give you everything you need to know. But as with any real estate investment opportunity that you're looking at, you have to understand how capital is being returned to you and how valuable that capital is. And internal rate of return, in this case, IRR, is definitely the metric you want to go to get that story. And remember how I mentioned you had investment option A and B in that example breakdown I had for you? Well, if you're wondering how you actually make money in those types of deals, in those examples, well, check out this video right up here where I walk you through all the steps to making money in real estate investing. So you'll definitely want to check out that video right up there.